Trump's policies and the housing market in 2025. What buyers and sellers need to know. Hi, I'm Nai Tao, a licensed real estate agent with Keller Williams Atlanta Partners in North Georgia, license number 442664. In today's video, we'll explore how Donald Trump's policies may affect the housing market in 2025. Whether you're planning to buy, sell, or invest, understanding the potential impacts of government policies on real estate can help you make better informed decisions. Thank you for watching. Please subscribe to my channel, The Real Estate Compass, for more updates and insights. Feel free to reach out if you have questions about buying, selling, or investing in income-producing properties or rental properties in Georgia. For more info, click the link below. Let's dive into the video. How Trump's return could impact real estate in 2025. The potential return of Donald Trump to the White House in 2025 has sparked many questions about what it could mean for the housing market. Will mortgage rates drop? Will buying a home become more affordable? While much of this is speculative, we can analyze Trump's past policies and campaign promises to predict some possible trends. Positive effects Trump's policies could have on real estate. 1. Lower taxes could boost housing affordability. During Trump's first term, the Tax Cuts and Jobs Act of 2017 gave many Americans larger tax refunds, which they could use for down payments or other expenses. If these cuts are extended or even expanded, it could leave families with more disposable income, making it easier to save for a home. 2. Deregulation might simplify lending. Trump is known for rolling back regulations. In housing, this could make it easier for buyers to qualify for loans. For example, cutting red tape on FHA loans could benefit first-time homebuyers. However, changes like this would take time to trickle down into the market. 3. Support for infrastructure could open new housing markets. Trump has consistently pushed for infrastructure development. Better roads, public transit, and utilities can open up more areas for housing development, potentially increasing supply and stabilizing prices in the long term. 4. Potential privatization of Fannie Mae and Freddie Mac. Trump has discussed privatizing these government-backed mortgage companies. Advocates argue this could make the housing market more competitive. But critics warn it might increase mortgage rates for borrowers, especially those with lower credit scores. Challenges that Trump's policies could bring. 1. Stricter immigration policies may affect construction. A significant percentage of the U.S. construction workforce comes from immigrant labor. Stricter immigration rules could lead to labor shortages, driving up construction costs and slowing down new home builds. 2. Tariffs on building materials. If Trump imposes new tariffs on imported materials like lumber or steel, builders will face higher costs. These costs are often passed directly to buyers, making new homes more expensive. 3. Higher interest rates from stronger economic growth. A booming economy can increase inflation, leading the Federal Reserve to raise interest rates to cool things down. While this is great for job growth, it can make borrowing for a mortgage more expensive. What about mortgage rates? One of the biggest questions is whether Trump's policies could lower mortgage rates. Can rates fall to 3% again? For rates to drop that low, the U.S. would likely need a major economic slowdown or recession, neither of which are desirable. Realistic expectations for 2025. Experts predict mortgage rates will likely fluctuate between 6% and 6.8% next year. While that's higher than pre-pandemic levels, it's more manageable compared to the peaks we've seen recently. Key factors to watch. Mortgage rates depend heavily on the Federal Reserve's actions. If Trump's economic policies drive inflation higher, the Fed may be forced to slow or pause rate cuts. Will home prices continue to rise? Broadly speaking, home prices are expected to grow by 2 to 4% in 2025. However, the growth rate will vary by region. 1. High-cost coastal cities could see bigger gains. Cities like New York, Boston, and San Francisco may experience higher price increases due to limited housing supply and strong demand from wealthier buyers. 2. Sunbelt states may see more modest growth. Areas in Florida, Texas, and parts of the Midwest might see slower growth as affordability issues weigh on middle-income buyers. 3. Condo markets face challenges. In states like Florida, Ongoing issues like aging infrastructure and rising insurance costs could put downward pressure on condo values. Should you buy a home in 2025? The decision to buy a home often depends more on your personal financial situation than on market conditions. Here are some things to keep in mind.
1.
Focus on what you can control. Rather than trying to time the market perfectly, consider whether you have stable finances, good credit, and enough savings for a down payment.
2.
Be prepared for competition. If mortgage rates drop even slightly, more buyers may jump into the market, driving up competition and prices.
3.
Think long-term. Real estate is often a long-term investment. If you're planning to stay in your home for 5 to 10 years, short-term fluctuations in rates or prices will matter less. What about sellers in 2025? Sellers may face mixed conditions in 2025. While demand could rise if mortgage rates stabilize, affordability challenges might force some sellers to adjust their prices to match the market. Hot tip for sellers. Consider listing your home during the spring or early summer, when buyer activity typically peaks. 4. High-end properties. Luxury homes in expensive markets may face slower sales if rates remain high. Be prepared to price competitively or offer incentives to attract buyers. Closing. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to the Real Estate Compass for more insights. Got questions about buying, selling, or investing? Feel free to reach out. I'd be happy to help.